Hey everyone, and welcome to this explainer. Today, we're jumping straight into the anatomy of a trading day. Specifically, we're mastering the operational hours of the London Stock Exchange. Because whether you're just starting to refine your day trading strategy or you're an old hand navigating global equities, timing your trades is honestly just as crucial as the assets you pick. So, let's break down the LSE day chronologically, find those really lucrative windows, and check out the platforms you can use to execute your strategy. Here is our quick game plan for today. 1. The LSE trading window. 2. The 8 a.m. opening bell. 3. The 4:30 p.m. closing rush. 4. Pro tips for day traders. And finally, 5. Platforms, leverage, and learning.
All right, Section 1, the LSE trading window.
Okay, so let's picture the standard trading day on the London Stock Exchange. The market officially wakes up at 8 a.m. UK time. Trading rolls right through the morning, hits a midday lull for a lunch break, and then officially wraps up at 4:30 p.m. And here's a really important thing to keep in mind. There is absolutely zero official trading activity outside of the specific designated window. That's actually a huge advantage for us because it tells you exactly when and where all that liquidity and activity is going to be concentrated.
It's also super important to remember that the LSE is strictly a Monday to Friday operation. It completely shuts down for weekends and public holidays. Since London is such a massive player on the global stage, institutional and retail investors all over the world literally have to sync their clocks to this exact schedule to make sure they're operating when the market is actually moving. Moving right along to Section 2, the 8 a.m. opening bell.
8 a.m. UK time. This is the starting gun. It's the exact moment every listed security goes live, and market participants can officially kick off buying and selling shares. But, it's way more than just a time on the clock. It's arguably the single most critical moment for setting the tone of the entire session. Those very first few minutes, they drastically dictate early price movements, which brings us to a really huge concept: opening volatility. Basically, between 8 a.m. and 9 a.m., the market gets hit with a massive surge in volume. You've got overnight news, global developments, and all these pent-up orders hitting the tape all at the exact same time. Now, long-term investors might just see chaos here, but day traders, they see pure opportunity to capitalize on some pretty wild fluctuations.
Now, let's fast forward a bit to Section 3, the 4:30 p.m. closing rush. 4:30 p.m. UK time is the final bell. This signifies the absolute end of the daily trading session. Once that clock strikes 4:30, no further trades can be executed on the exchange for the day. But it's crucial for another reason. It determines the day's final settling prices for all those stocks. Every trader knows this deadline is looming, and that creates a very specific, kind of frenzied market behavior as the final seconds tick down.
So when you put our two power hours side by side, that first hour from 8 to 9 a.m. and the closing window from 4 to 4:30 p.m., a really clear pattern emerges. Just like the morning is super volatile with all those opening orders, that last half hour sees intense volume as everyone rushes to close out positions and lock in those final settling prices. If you want to trade efficiently, these are the two windows where you need to be at absolute peak alertness.
That brings us to Section 4, Pro Tips for Day Traders.
All right, so how do we actually maximize these volatile windows? Our sources highlight 3 really vital steps. First up, monitor market news early. Getting the scoop before that 8 a.m. bell gives you a serious edge in predicting the open. Number 2, use limit orders. Because prices are swinging so wildly, setting a hard cap on the price you're willing to accept protects you from sudden, unexpected spikes. And third, focus on key events. Things like big economic data releases act as the true catalysts for all that volume. Finally, let's dive into Section 5, Platforms, Leverage, and Learning. Let's take a look at some of the top broker platforms highlighted in our source data. Binance is leading the pack with a solid 4.7 rating, largely noted for super low fees and massive crypto liquidity. Then we've got XTB coming in with a 4.5, and they're really celebrated for fast execution, which is an absolute must during those split-second power hours. And wrapping it up is AvaTrade at a 4.3, offering a really diverse mix of assets and strong regulation for folks who prioritize strict security. Now, beyond just the platforms themselves, the leverage options out there are honestly staggering. Standard margin trading usually hovers around 10 times leverage, which gives your buying power a decent little boost. But if you step into the more aggressive futures markets, platforms are offering maximum leverage from 100 times all the way up to roughly 125 times. This kind of extreme exposure lets traders maximize tiny price movements during power hours for massive gains. But listen, it requires a seriously expert understanding of market mechanics. Make one wrong move at 125x leverage and you are facing rapid liquidation. It is literally the ultimate high-risk, high-reward scenario. But even when the traditional markets close at 4:30 p.m., the learning shouldn't stop. To help you expand into the 24/7 crypto markets, our sources recommend a fantastic reading list. We're talking titles like The Basics of Bitcoins and Blockchains, The Crypto Trader, Mastering Crypto Assets, and The Bitcoin Standard. Building up that theoretical knowledge is just the perfect way to spend your downtime. Our source sums all of this up perfectly with this quote: "Align your trades with these operational hours to ensure smooth transactions and optimal market conditions." So, here is the absolutely crucial takeaway. You can have the best broker, insane leverage, and all the theory in the world under your belt. But if you aren't zeroing in on those high-volume periods right at the 8 a.m. open and the 4:30 p.m. close, you are simply missing the very engine that drives the market. Timing really is everything. We've covered the timeline, the psychology behind the opening and closing bells, the strategies to protect your capital, and the platforms to make it all happen. The structure is right there waiting for you. So I leave you with one final question to chew on. Are you ready to trade the power hours? Thanks so much for joining me for this explainer. Keep learning, and I'll see you next time.